Okay, legends, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic weekend. Over the past 48 hours, we have seen a dramatic surge toward the upside for Bitcoin, the altcoin market, and the traditional asset market as a consequence to Jerome Powell during the Jackson Hole press conference alluding to a high probability for interest rate cuts moving forward, the market anticipating now with around 85% probability interest rate cuts in September, resulting in the markets pushing upwards in anticipation, front-running these potential cuts. In today's video, we are going to be discussing what this means for the macro outlook, how the charts are developing / have reacted to this news on the short term, the key levels you should be paying attention to, exactly what we expect next, and of course the macro analysis. The key levels you should be paying attention to on the macro, the weekly close, the total market cap, the altcoin market cap, and traditional markets. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin, checking out a 50+ month trading track record, or watching a 10-minute video showing you inside the VIP channel. You get access to trading setups with exact entries, targets, stop losses, trade justification, exclusive analysis, and so much more, including access to all of our group chats, from our general chat to our trading chart and education chat to our daily video help, community setup, trading and coding chat, and much more. Check it out. We'll love to have you in there. Let's jump into it. So, taking a look at Bitcoin, guys, as we mentioned in our most recent video, we discussed Bitcoin having corrected into our second high time frame short target. As you know, and as we've been paying attention, we turned short on Bitcoin upon the breakdown of the break of structure at 122,300. We've been shorting this entire time, with our first target being this 115.9k level. Upon the breakdown of this uptrend, we then expected corrections into 111.9, which we retested perfectly, which was the range low of this broader consolidation and the prior break of structure. In our most recent video, after retesting this low, we discussed that there was some bearish weakness developing on the short term, with a falling wedge pattern, some bullish divergence, and of course some weakening bearish momentum indicators printing some sell signals, suggesting that the selling pressure was beginning to decrease, lose volatility, and the potential for buyers to step in was present. We discussed the potential for bounces and rallies back into 115 and 118 being that key resistance we need to break for the buyers to fully take control. So a lot of this move was fueled by, of course, a Jerome Powell press conference, resulting in a much faster rally for the market, of course, with Ethereum really pushing quite aggressively into a new all-time high. As you know, anytime we see a lot of optimism in the market, we see speculative assets within the broader market perform better. Hence why we saw the total altcoin market cap bounce a lot more aggressively than what we saw Bitcoin bounce. The more speculative assets rally a greater percentage, okay? So we've seen Ethereum do very well, we've seen Bitcoin do very well. However, Bitcoin hasn't broken through our key horizontal resistance, which is at $18,000 lower high level, to signify the buyers are fully back in control. But of course, we have ended this downtrend. We are now in a uptrend against this support. So we've got a lot to take a look at with this. We'll talk about it in today's video. Moving over to the market data, 24-hour volume down 50%, 273 billion. Liquidations down 70%, 211 million, 135 million coming from longs as the market does pull back a little bit since the last recent rally, 76 million from shorts. The DXY, of course, dropping downwards here upon the news of interest rate cuts. As we've mentioned, if we do see these interest rate cuts occur, and the faster we see them occur, and more aggressively they occur, we expect continuations to 93 and 92. If you've been following the channel, ever since the loss of 106, we've been expecting 92 to 93. So we're more than halfway to that target, but we are expecting continuations into this region, with our invalidation being the break back above 100. If we break back above 100, we then expect continuations back up. Until then, downward expectation is still on the cards. The S&P 500 managing to sustain above its daily uptrend. This daily uptrend spans back since the beginning or middle of May, so a couple months now, around 3.5 to 4 months. Bouncing perfectly on this uptrend upon the interest rate news again, dragging the traditional asset market upwards, breaking back above the break of structure. A very good sign for the market here that we are able to sustain above the uptrend. But watching the new week reaction, we're watching to see if we see a sell-off into the new week, pushing back under, or we're able to break and sustain back above these local highs. Again, breaking and sustaining back above these local highs will trigger the next leg up, so we come bullish again above 6,500. Until then, the risk of corrections back into support is still very much on the cards. This will still be considered a healthy pullback back to support. The only time we'd be really concerned is if we drop back below this 6,250 level, as the risk for larger corrections back to the 200 actually take place below there. So are we out of the woods yet? From a price action perspective, not really. We are still under resistance. From an economic perspective, there is potential because, of course, we've had this indication we may see rate cuts. We know rate cuts are bullish to the market, but we haven't had confirmation, right? It's just an indication. We may not see interest rate cuts in September. We might see that pushed further down the line again. It doesn't necessarily mean we're 100% going to see interest rate cuts. So if we don't, there is a risk we see pullbacks. The probabilities are currently stacked in favor of that. Let's jump over to Bitcoin, guys. A lot to take a look at. Before we do, make sure to go ahead and sign up to BitGet. BitUnix and BingX exchange links are down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll support me making this content on a daily basis for you all. And most importantly, you'll support yourself trading on exchanges I use and I trust. You'll get access to those exclusive trading fee discounts, and you'll get access to every single monthly campaign we do exclusively on BitUnix, only for our community. We're the only channel out there, the only channel that does monthly community-driven exclusive promotions on BitUnix, considering I trade a significant amount of volume for them. They give us some pretty good rewards in return. We've given away over $100,000 US in the last 3 months just from that. So sign up to BitUnix to get access to that. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, let's get right back into it. We've talked a lot already about the cause of the market pushing up. We're not going to go over that again. We already know why it's gone up. We know how it went up. We know what triggered it. We know where it went to. Let's talk about now the aftermath. Let's talk about where it is now, the potential for the next moves. Are we going higher? Are we going lower? Are the key levels we discussed in our prior videos on the weekly chart still valid? Are we still paying attention to our 62.09? Are we still paying attention to the total market cap? So we're going to talk about all of that. Let's jump into the total market cap and altcoin market cap to start off today's video. So the total cryptocurrency market cap, we have 23 hours remaining, guys, until the weekly candle close. Now, we've talked a lot about this weekly candle close because it is a very important weekly candle close, and the reason it's important is because prior to this news, prior to the interest rate reduction news, we saw Bitcoin underneath the 62.09. It's actually dropped back down momentarily here below 115 over here, 62.09. But we saw the total cryptocurrency market cap coming back down to retest 3.65 trillion, with the RSI breaking below the uptrend, representing a negative momentum shift, while we saw the altcoin market retesting the $1 trillion level and the uptrending support. So we saw a lot of confluence. The market was on the edge of the cliff there. We were thankfully being able to save by this interest rate news. But that still does mean this weekly candle is going to be important because it's going to signify whether or not this news that we had is likely to sustain into the new week, and then we're going to see the reaction of that next week. So the weekly candle close for the total market cap, we want to be watching for weekly candle closes above 3.95 trillion. The reason we're watching that is the weekly range high. We are watching the closes above this level to signify strength and continuations up into the new week. If we're looking at horizontal levels and diagonal levels, we are technically still in an uptrend. We've been in an uptrend ever since these lows at 2.31 trillion, retesting at 3 trillion. We've been in an uptrend ever since, and our RSI confirms that with respective lows on the RSI matching the lows on the trend of the price action. So we know very clearly that the momentum is uptrending as the price is uptrending. We're watching for discrepancies between these two to signify reversals. So if we're watching for reversals, we're watching for one of these to break, whether or not that be the price action breaking below before the RSI, which is more or less unlikely, or the RSI breaking below the trend line before the price does, which is leading for a potential future price correction underneath its uptrend. And that was the risk of this weekly candle close, which has mostly been abolished now due to the strong performance in the altcoin market as a consequence to the interest rate news. But we are still looking forward into the next few weeks as this being a potential invalidation of the uptrend or a risk factor for corrections. So to put it simply, the total cryptocurrency market cap is bullish while we hold above 3 levels. Number one, the $3.65 trillion level, which is the prior weekly range high. Number two, the multi-week uptrend spanning back since April. And number three, the uptrend on the RSI. We can hold these levels. We expect higher, with 3.95 weekly close being the trigger for that move. But on the higher time frame, we could even see these pullbacks into those levels and continuations. The key levels we are watching are those 3 levels. Let's move over to the altcoin market. The altcoin market has been a little bit more volatile. As we've mentioned, more speculative assets perform better in periods of hope, greed, and optimism, which is exactly what interest rate reductions push for. They push forward hope, they push for greed, they push forward optimism, right? We can see the risk asset markets go up, and we see the altcoin market particularly perform a little better, which is why we saw Ethereum jump like 15-20% even in like a day period. And the second largest daily rally for Ethereum in the history of Ethereum's price action as a consequence to that. And you're probably wondering, well, if Bitcoin's still struggling so much, why is the altcoin market performing so well? And that is because Bitcoin dominance is continuing toward the downside. We are still moving into that 200 EMA. We are still moving in towards our sell side liquidity, which is 56 to 55.5 as a potential target. And provided Bitcoin dominance continues down, we are going to see the total market cap, we're going to see the total altcoin market cap hold relatively well / overperform Bitcoin in the broader scheme of things. And as we see the total Bitcoin dominance decrease, and we see the cryptocurrency market cap either go sideways or go upwards, we will see altcoins on general perform better than Bitcoin on the short term, and even slightly on the weekly and higher time frame, depending on how long this downtrend continues for the DXY and the uptrend continues for the total. So looking at the total altcoin market cap, again, the key levels we are watching to sustain above, very, very clearly, we are watching the $1 trillion level and the uptrend. But when we're looking at the weekly, we are watching for a weekly close here above 1.06. Now, as we can see, we've had around 10 or so attempts to close above 1.06 over the past, past 8 months, 9 months even, okay? So 9 attempts. Every single one we have seen failed. We have either rejected fully from that range or closed at resistance, the last one being a close at resistance. We have not been able to close above at all. Therefore, we are watching for an outlier in the data set to signify a potential shift in sentiment, right? That's what it is. An outlier in the data set to signify a potential shift in sentiment, which increases the potential for the breakout sustaining and continuing. So we're watching for a weekly close of 1.06 trillion to be confident or more confident that the altcoin market may sustain and the altcoins may see continuations against Bitcoin. Watching that closely. Let's jump into Bitcoin, guys. Starting on the weekly, coming to the short term. The weekly is still at risk. And this is where we have to kind of bring it back full circle, because at the end of the day, Bitcoin is the market leader, right? It is driving the market. It may not always perform exceptionally better than every other asset because Bitcoin dominance does fluctuate and sentiment changes. But if Bitcoin is going down, it is more or less likely the rest of the market is coming with it. And we do have something of a warning sign printing over here on the weekly chart. In again, 24 hours, the weekly candle will close, and we do have the 62.09 on the RSI still being very much as a risk for a breakdown. Now, for Bitcoin to avoid the 62.09 RSI breakdown, we're probably looking at a close at least above 116,000 on the weekly to be entirely confident that the 62.09 will not break down. I think we could probably look around 115.6, 115.8. It's hard to give you an exact number because it's hard to actually predict how the RSI reacts to these incremental movements on the short term. But we're definitely looking at above 115.4 thousand, 115.4 thousand to avoid a breakdown on the 62.09 on the RSI. Now, we know historically that the breakdown on the 62.09 on the weekly chart over the last 10 years, okay, we've had, I believe now 12 instances of breakdowns, only 2 of which did not result in corrections greater than negative 10%, okay? One of the 2 didn't move down at all. The second, I think, moved down 6%. So you could say that 11 out of 12 resulted in corrections, 10 out of 12 resulted in corrections greater than 10%. Now, whether or not that plays out again, nothing is certain. That doesn't mean we're going to see the same probabilities extend for infinite amount of time. We could see it invalidate again. But the probabilities do tell us that this is something we need to pay attention to, excuse me, because the risk of corrections here are still on the table. So, pay attention to the 62.09 RSI. We've mapped out a couple instances here. You can see the breakdown resulting in corrections to the 50 EMA and Gaussian channel upper band. The breakdown resulted in corrections to the 50 EMA and Gaussian channel upper band. Let's go back a little bit. The breakdowns over here. Breakdown resulted in correction to the 50 EMA. We're going to take a look at this one here. A breakdown resulted in a correction at least to the 50 EMA. Let's go back to 2021. The breakdown resulted in a correction at least to the 50 EMA. Again, the breakdown resulting in correction to at least the 50 EMA. So we can go back and back and back, and the same, more or less the same pattern we have seen. Breakdowns result in corrections to the 50 EMA, breakups result in continuations to the 50 EMA. So, or if we are above the 50 EMA, we see continuations generally into new highs. So we need to pay attention to that at a bare minimum. In combination with that, we can see Bitcoin is still sitting underneath the daily uptrend. We have come back to retest that daily uptrend now as resistance. Now, we discussed in our prior video, I'm going to try to wrap today's video up a little bit in a second, that there are 2 options for price when we see breakdowns of extended trends, okay? Extended diagonal trends. Option number 1 is we see complete mean reversion to the 200 moving average, or sell side liquidity, which is sitting at 98 to 100,000, okay? Option number 2 is we see absorption of the selling pressure resulting in horizontal consolidations before continuations upward, which is the price will indefinitely push in this horizontal consolidation, develop a new structure, then continue upwards. Those are generally the 2 outcomes we see after these multi-month downs or even break ups of horizontal diagonal consolidations. So if we are looking for the downward move now, we need to be aware of the trigger for that move. And very simply, the trigger for one move is the invalidation for the other. And therefore, for us to expect aggressive corrections down with our targets being 198, and I think people misunderstand this all the time. For our targets to be 198, for this move to come down again, we expect this move to occur, we need to see the price action break below the horizontal consolidation. This is what we discussed in yesterday or the day before's video. We talked about, we've seen corrections, we've seen pullbacks of support, we are now seeing a little bit of bearish weakness with bearish volatility decreasing, bullish divergences developing. We're seeing the potential for a pattern to develop which will result in a continuation back upwards. But for us to see the move downwards, for us to see continuations down, we need to invalidate the breaker structure. We need to break back below this support, and that would trigger a larger continuation into those lower support levels until we lose 112,000, 111.9. That is a major potential support where we expect potential reversals from, which we have seen. So let's now talk about what the buyers need to do to reverse the price completely back upwards. Because we've talked about what the sellers need to do to push the price much lower, let's talk about what the buyers need to do. So for the buyers to push the price completely back upwards, we need to do two things. Number one, we need to clear the uptrend, which is the uptrending resistance. Now this lines up perfectly with the resistance at 118,000, and we need to clear the horizontal level of liquidity at 118,000. And therefore, for us to be confident, the buyers will push the price likely back above the range high, or at least into 120,000. We need to clear 118 and the uptrend. And that is a major rejection point where rejections could take place again. But if we clear it, we then expect continuation. So again, if you've been paying attention to the channel, the break of the downtrend were continuations to 115.5. The break of 115.5 were continuations to 116 to 116.9, the prior lower high. We have rejected from there, pushing back below 115.9, running the risk of a downtrend forming into support. So we're jumping into the short-term price action now. On the hourly chart, you can see we have actually come back down to retest some of these levels of support. So some of these prior levels of resistance, right? We had this resistance here, support in the channel, okay? Prior resistance becomes future support. So we are bouncing. Bitcoin is bouncing. We're going to see a little bit of relief over here. If we lose this level of support, we then expect corrections all the way back down to eradicate this entire rally. We would expect the price to retrace back to where the rally started from, which is around the change of character level, 113.3. Okay, that'll bring the entire market down for the weekly close. If we sustain above here, we do have potential for reversals all the way back up to the change of character, 116.8, which will give us a nice green tick for a good weekly candle close. So watching how that develops. Thank you for tuning in. Catch you guys on Tuesday. I won't be available tomorrow. I've got some bookings with some friends tomorrow morning. I'm going to go play some golf, so I won't be available, but I'll see you guys on Tuesday. Have a fantastic rest of your day. Bye.